Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, February 12th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture as usual, work my way into the day itself. This is a weekly bar chart. This shows, number one, the testing of what had been a targeted channel top at 255.60. About 7 weeks ago. When we tested that channel top, we'd mentioned how you should allow for bearish rotation to the channel bottom in the 170s, still 171.79 and dropping. We did test this area last week. We did not test the channel bottom to the very tick, but we dropped inside into the 1% zone. What was also part of that targeted zone was the 5/8 downside Fibonacci from the January 23 low against the more recent July high, 177.25. So this area has held, and like the channel top 7 weeks ago when testing it, now that we've tested the channel bottom, we are mentioning how you should allow for 2 to 3 months, 3 to 5 at the most, bullish continuation, rotation, recovery, back to the 255.60 and dropping gradually. I'm going to say 6-month channel top, going back to July. So really more of a 8-month channel top now. And this 255.60 dropping weekly should be considered in reach over the next few months. Now, I don't see it as a clear-cut objective, but you can trade that. You can prepare for that. You can go long, be long already, perhaps from last week, Tesla, whether that means long the stock outright, or maybe you're long 250 strike out of the money calls that don't expire for at least 6 months, if not a year out, perhaps. And, you'll breathe a sigh of relief if over the coming weeks we were to close above this 213.40 new descending 1/3 speed line. I say new because it's based on the low that was put out a week ago. So there's a couple things to be said about this chart. This is a daily chart, and having tested channel support, we'd mentioned how our next show of strength, our next go with buy signal that could play out on a multi-session 2 to 3 week basis would be a settlement which did occur last Friday above the 189.86 channel top. And so 189.86, we have a UP next to it, stands for up pivot. It means that bullish momentum is likely to play out as we move through this week and into next week. This could be a 1 to 2 week rally, 2 to 3 at the most. I think 1 to 2 weeks is likely for anticipating now 213.40. Now, as you're well aware, as we were testing the low to mid 170s a week ago, I've been mentioning how this channel top at 213.40 should be considered a 3 to 5 week target. And now it's more like in the scope of 2 to 3 weeks that we've settled last Friday above the 189.06 channel top. So, 3 to 5 day swing traders, 2 to 3 week swing traders can go long at 189.86, anticipating 213.40 over the next 2 to 3 weeks. I don't see it as a 1 week target. 2 weeks probable, 3 weeks at the most. So long as we continue holding and closing above 189.86. Now, on the way up, I do have these levels marked. The low settlement price from last October was 197.36. The actual low was 194.07. We also have a speed line at 193 even. So, Monday may not be a blast away to the upside day, even though I think the market is poised for aggressive gains over the next couple of weeks, as I've already mentioned. You've got 193 even, you've got 194.07, the actual low from October, and you've got 197.36. I think at 197.36, the market can get into trouble on an intraday basis. We could top out at 197.36 for a good part of the day, perhaps ease back into the 189.86 region on an intraday basis. I will say that if we push through, especially if we were to open above 197.36, that would be quite a gap higher opening. But if so, 206.27 would be in reach on an intraday basis if we push through, especially if we opened above 197.36. So these are your day trade points. Selling 197.36, ideally taking profits selling 197.36 after having already been long perhaps from Friday's close. But whatever the case may be, we could top out at 197.36, fall back to 189.86 intraday. And if we push through 197.36, we just might reach 206.27 by the closing bell. I will say that if we settle today above 197.36, that should provide secondary momentum for reaching 206.27 tomorrow, where we can place a daily high. And, under that scenario of closing today above 197.36, reaching 206.27 on Tuesday, we are likely within the week by Friday's close to reach our 2 to 3 week objective at 213.40. At 213.40, we can top out for at least a week, quite possibly well into March. From 213.40, we could fall back into the low 170s within 3 to 5 weeks or doing so. As I've been saying, for the next month or two, it really could be a low 170s floor, low 210s ceiling, both of which are dropping gradually. We could trade inside of this wedge all the way through March trade, perhaps, before one of them gives way. And it is presumed that it would be 213.40 that would give way to higher price activity as opposed to breaking 172.91. But, we could break 172.91, and I'll get to that in a moment. But I will also finish this whole idea with, if we close above 213.40 over the next few weeks, that previously mentioned 255.60 descending channel top would be considered our next 3 to 5 week target. So if over the next couple of weeks we happen to close above, the 213.40 speed line, then we're just another 3 to 5 weeks away. So that's where, when I say could be 2 to 3 months only before retracing all the way back into the 250s, that would be a scenario whereby, we would close sooner than later above 213.40. So it's considered a 2 to 3 week target. Obviously we don't know if we're going to fall away from it for the following 3 to 5 weeks. We could hesitate here, close above it, and then continue onward and upward over the following 3 to 5 weeks into the 250s. So that is that. Let's talk downside, that in the event we merely close back below 189.86, I see that as a good high for the week, and the market then likely to fall back into the 170s, whether that's merely 177 and a quarter. Sorry, I picked the wrong chart here. Whether that's merely 177 and a quarter, our long-term 5/8 Fibonacci, or whether we continue all the way back to 172.91. I'd say 177 and a quarter by the end of the week, 172.91 as we move into later next week. I mean, we could do all this by Friday's close, but if we close today below 189.86, I see no good reason to be long Tesla as we move through the rest of the week. 3 to 5 day swing traders should be short into later week if we close below 189.86. If we break, I should cover the downside probably a little bit better, and let me zoom in just a little bit. And that is to say that if we break, especially if we open below 189.86, 184.57 is likely intraday. And if we close today below 189.86, 181.06 likely within just a couple of days, and that 177 and a quarter Fibonacci within the week. Potentially 172.91. Now, I don't see this happening this week. I don't see it happening all the way through March. I think that the test of the low 170s is a good one, and we should see at least 213.40 over the next few weeks. But if on Friday or next week Friday, we happen to close below the 171.79 channel bottom, that needs to be by a 1% margin. 170.07 this week is the 1% violation of 171.79. And if we close Friday at 170.07 or lower, no good reason to be long Tesla as we move into the second quarter. If you bought any of those out of the money calls that I've already mentioned, liquidate them. That would be my suggestion. And perhaps reach for 100 or 102 strike out of the money puts that don't expire for at least 6 months. I consider this to be a likely 2 to 3 month downside play. It could be more accelerated than that, but that would be the next big picture objective, this former channel top combination January 23 low. But we're a long way from that right now. I think it looks good to the upside, at least near term. And what I mean by that is expecting the 213.40 speed line over the next few weeks. That's our next trouble spot, and we'll take it from there. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. We put out 2 solid stock picks every week. Same format you see here, 5 to 10 minute video format. We were always looking for 20% moves on those underlying stocks. So have at it. Check us out. A 5-day free trial. If you don't like what you see, you can bow out at no cost to you whatsoever. I just hit the 10-minute mark. I'm going to leave it at that for Monday's Tesla. Of course, I'll be back tomorrow with Tuesdays. You have a great day.